Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Looking ahead today at midnight we've got the US CPI number. All eyes will be turning towards that as it will give an indication maybe on how quick the Fed might be looking to lift interest rates. So keep an eye on that number. But for now, the market seems a little bit relieved that there was no surprises from the US Federal Reserve after it recently testified to Congress. Nevertheless, the market is looking towards that top side of the range, around 71.25 for the Australian dollar, with the 60-day moving average slightly lower, around 72.55 to about 70, allowing a little bit of slippage to the upside. In light of the pattern, the RSI is positive as it's broken above the midway point. However, the lackluster MACD is flat and therefore may limit the upside in the short term and therefore see a rejection like we've seen previously around that 60-day moving average, which is seen a key level. If so, we could see the market turn back towards the support level of 71.60 and looking beneath there to 70.90 where a short-term base holds. The euro is edging higher since it rebounded off the support level seen around 112.70.90 and looks towards its top side of the range around 114. Heading into, as I say, the CPI number in the US, the dollar index, which measures the greenback strength against a basket of 6 major currencies, is weaker. It's trading around 95.60 at the moment. Nevertheless, the market may reject this 114 and see the dollar recover and therefore look back towards that bottom side of the range, which is around, as I say, 112.70, maybe down to 112.25. The dollar yen, since rejecting that top side around 116, still holds to a negative bias when we look at the indicators, that is mainly to the RSI and the MACD. Therefore, I feel we are looking down towards 114.60 as a potential target and reassess. With hardly any pullback, sterling is powering higher and looking towards that top side around 136.80.90. That could lead on to 137.70 as the technicals are still relatively positive and an ADX that trends bullish. The market has now negated the CAD yen outside range day as it pushes higher around that 91.90 level. If reached, could see the market push on towards 92.5, where the market may find a bull trap and reassess from there. There is a bit of divergence coming through here, so to the bear case. So let's see if the market does find a bull trap as it heads higher. Talking of bull traps, we may be even looking one for gold as it gets closer towards that 1,833 to 1,840 level. It did break above that level of 15 and now holds to a positive bias as both are married up to the indicators of the RSI and MACD. However, I'm not overly bullish at these levels. When we look back on history, it has failed many times and could do so again. And look back towards the bottom side of the range, also a key point at 1,788. Oil's cleared the level of $80 a barrel and now looks towards the highs posted back in October, which is around $83 to $84 a barrel. Holding steadily to the technicals, the market can clearly reach this level if this pattern holds, and then reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day.